There, Rati here with Mami Beluga Investing. Today I'm going to discuss the third company that constitutes Singapore Straits Times Index. Yes, again, it's another bank. It's UOB Bank. I think this will be the last bank in this series after DBS and OCBC that I have discussed in my previous videos. My quick take for UOB is it is again a solid company, but I will not take any long position at this moment. What are the basis of my conclusion? I'll explain in the rest of this video, so keep watching. A little disclaimer, this is an amateur video. My main intention is to record my learning journey of investing from scratch. This video shall not replace any financial advice and neither suggestion to take up a position, buy and sell in the stock market. Please conduct your own research before making any decision. Finally, feel free to put your comments, criticism, and suggestions in the comment section. Okay, now let's have a quick look at the company's profile. UOB was incorporated on the 6th of August 1935 as the United Chinese Bank. And then in 1965, the bank's name changed to United Overseas Bank, in short UOB as we know today. In the early days, the bank catered mainly to the Fujian community. Today, it has grown more through a series of acquisitions. UOB notable subsidiaries are Far Eastern Bank in Singapore, United Overseas Bank in Malaysia, United Overseas Bank in Thailand, PT Bank UOB Indonesia, and United Overseas Bank in China. The UOB Group comprises of a network of more than 500 offices in 19 countries and territories in Asia, Pacific, Western Europe, and North America. Looking at the share ownership, UOB can be said as a kind of family company because 55% of the shares are being held by the same family, which is the Wee family. Now we have a quick knowledge of the company. Let's check out the company's performance. So my first go-to data is to look at the company's performance is their income. In this case, I plot their annual earnings per share for almost 14 years from 2007 to 2020. The earning data is plotted as red dots connected by thick red lines. I tried to plot the EPS as far back as possible, which gives me some overview of how the bank is performing during crisis. Immediately, we can see uptrends in the earning, which is always good. There are 4 dips that we can see, which 2 of them I can correlate to the past and ongoing crisis. Few slight dips from 2007 till 2009, which might be related to UOB exposure to US housing crisis, that is the subprime mortgage collapse. A moderate dip in 2011, which is I cannot relate to any event at this moment. Then another period of dip from 2014 to 2016, which again I cannot relate to any notable event yet. Finally, extreme drop in 2020, which coincide with the collapse of Hin Leong trading and coincide with the COVID-19 pandemic. To see how the company performed during 2020 crisis, let's look at the income in more detail. That is the quarter by quarter income. So here I plot the annualized quarterly earnings from 2017 to 2020. It seems that UOB earnings have been dropping since 2019. So it started before the COVID-19 pandemic. The pandemic seems to make it worse. However, there are signs of recovery toward the ends of 2020 as we see a raise in the company's earnings. Okay, that's the company's earning. Now let's see how much of the company's profit is distributed to the shareholder as dividends. Here I plot the dividend payout annually as red dots connected by thick red lines. Each point is annotated with 2 numbers. The number above the red dot represents dividend per share. The number below is dividend payout ratio to the earnings. As a comparison, I've plotted earnings per share annually as the thinner dots connected by thinner red line. At a glance, in my opinion, UOB has been very prudent in distributing their profit as dividend. First, the amount of dividends seemed to be consistent with the earnings. also seem to increase slower than the earnings. The payout ratio ranged from 13 to 33. There are some decreases in the payout ratio between 2011 and 2014, in which I'm not sure what is the cause. All in all, I'm fine with this level of payout ratio. It is really prudent. It gave me some cash capital for the company to grow their business, as well as some safety net during crisis. Now to evaluate UOB stock price, I've placed here a plot with 3 layers of information. They are the price in red continuous line, the 10 times earning multiply in green dashed line, and 15 earnings multiply in green dashed line. Now let's go through each of the layer one at a time. First, let's look at the easy and the most popular one, that is the price. UOB's price per share have been fluctuating with sort of a regularity for the last 8 years, where it looks like a major dip happened every 4 years. One at the end of 2015 to early 2016. The second one, the more extreme one, at early 2020. There is also a quite significant drop in the early 2018, but don't take this 4-year cycle as price low for UOB. In my opinion, they may just be coincidence. So that's about the price movement for the past 10 years. After here, I won't be able to judge whether UOB share is still reasonable. Okay, now I have added another layer of information. I plotted annualized earning multiply for every quarter. In this case, the green dashed line is plotting 10 multiply of UOB's quarterly since 2012. It's actually a lot of data to compile. Okay, anyway, I'll put forward my criteria here. That is, for mature company, I would put any price above 10 earning multiply as expensive and below that as cheap. I could observe that up to early 2017, UOB was still considerably cheap. We can also see that between 2016 to 2017, UOB's share price has dropped and then recovered, even though its earning was actually stable. Since early 2017, UOB's share price seems to go up much faster than its earnings, which finally catch up at the end of 2019, before it dropped again sharply in early 2020. Similar bullish behavior seems to happen since early this year, 2021, where the share price have been climbing, even though there was no announcement of increase in earnings. I would like to emphasize the word announcements, as all of my analysis is based on publicly available data. If the price increase was due to some unannounced information, I will not be able to capture that. So now, when the price goes up, how high can it go? In this plot, I've added the third layer of the information. That is the 15 times the annualized quarterly earning multiplied. At a glance, for the last 10 years, the market had not been really confident with UOB growth potential. My conclusion came from my observation that UOB price hardly reached 15 times earning multiply. The closest one was in mid-2018, where the price is about $27, pretty close to about 15 times earning multiply at 30. However, since the end of 2020 to early 2021, the price has poked through the 15 times earning multiply, even though the price is not as high as mid-2018. This price increase has not been supported by earnings increase. It makes me wonder if the price will drop again soon. So I'm putting my defensive side here. Based on the last quarterly earnings, around 15.4% seems like an ideal price as opposed to the current price, which is around $25. So, all in all, I do really feel that UOB is a solid financial institution. It is also a nice example of prudent heritage and superior education, where they are representatives of 3 generations of the founding family, still currently involved as executives in the company. In my opinion, the market has high hopes for UOB since the price increase has been ahead of the company's performance. As for now, I will not make any position in UOB because seems like the price has passed through its historical upper barrier of the stock valuation, and the increase of price is not accompanied by increase in their earnings, so the price may drop. The emphasis here is may, because there's a good chance that I'm wrong. Okay, that's all for this video. I'll see you again next time. Please subscribe for more of this kind of video. Finally, feel free to put your comments, criticism, and suggestions in the comment sections below. That's all for now. Bye-bye.